Today we're doing an interview on day trading. It's gonna be awesome and you're gonna wanna stick around to the end. We are interviewing Karl. He is a serial entrepreneur. He is into day trading. He's been into real estates, many other investments, and he has a wide range of things, even aviation, that he's excited with. Stick around to the very end of this. It's gonna be awesome. All right, everybody, you know the drill. Hit that like button, hit subscribe, and hit the bell to get notifications of new videos as soon as they drop. A lot of you guys, I've been looking at the analytics that are watching are not subscribed. So like I said, make sure you hit that button and let's get right into it and learn something from Karl about day trading.
Hey everyone, this is Karl. Karl, could you introduce yourself?
Hi, my name is Karl Pierre. I am a real estate investor, stock trader, and overall, I guess, serial entrepreneur. And I actually reached out to Jacob because I saw what he was doing on his channel, and I really wanted to give my viewers an idea of what it's like to start your own business and scale your own business. And in that conversation, we got to chatting about trading stocks and what else do we do outside of our core business.
Yes, that's great. That's a perfect lead into this, because as we kind of got to know each other, found out what we did, because everybody does something, and it has, especially when you're into business. If you want to start a business alone, you usually have like ADD and you want to do a million different things, and you're hopefully good at one and not just kind of picking and choosing at everything. But so we got into that. Karl was involved in stocks and in day trading. That's something that stocks in general, I've been so interested in. I thought it'd be a great opportunity to ask some questions, because I do talk about investing from time to time, and I will be talking about it more. And I wanted to get more education from someone with more time in the game to kind of help everyone out. So I had some questions today that, Karl, if you're good to go on this, I can run you through these and get your thoughts, and maybe we can all learn some stuff today.
Yeah, absolutely, man. I've been trading since 2009, so that's 11 years. So I'm pretty well versed and should be able to address most of your questions. So let them rip.
That's perfect. I mean, that's and this isn't even really a question, but that's really cool that you started in such a hectic time. I mean, we were coming right out of 2008, so you've been on right at the tail end of something major happening before, so you kind of, even though what we're dealing with now is totally different, you know what it's like to see the market tank.
Yeah, I know what it's like to see the market tank. I know what it's like to be in that trading environment where stock prices are super low, and because of that, there's like less rips to take advantage of, right? When stocks are trading like at $20, $30 for Microsoft, for instance, you start to, and I'm not sure if that's where Microsoft was then, but compared to where it's trading now, you're going to get less movement, right? Even a 1% move in the day is only 20 cents.
Yeah.
Right. So, and 1% in a day is fairly sizable, right? So there's less opportunities to grab. The only difference is that you can make up for it in share size, right? And I guess we could kind of get into that if you want to, but you're going to have those two things to manage, right? How many shares you're trading and how much capital you have to trade and what your skill level allows, right? So if you're still looking to make, a certain amount of money, you could do by trading more expensive stocks, right? And shares, or you could trade very inexpensive stocks, but with larger share value, right? And make up for what you're looking to get. So I got involved right at that point, and I was coming in the door while a bunch of traders were blowing up. And I think that helped me in a way, because coming off of 2006, 2007, there were guys who were making money because, like they say, the rising tide raises all boats, right? So you can make money in like an uptrend just by doing foolish things. And when the tide shifts and you're not prepared for that, that's when you get wiped out. So fortunately, I got to see and learn from people who were trading in, a good time, and then actually getting involved in probably one of the worst times.
Okay. Yeah, that's very cool. Yeah, that shows you so much, and that's what I was kind of interested in with me getting started right in, like, just getting involved so much more in stocks right now. Is, like you said, you see the worst of it, so you don't just get overconfident because you're riding what most people were riding 6 months ago, thinking you couldn't do any wrong. You just put money in and it's going to go up. So
Yeah.
But yeah, so you already hit my first question. How long were you a day trader? My second question for that is kind of like, what was the hardest part for you about being a day trader?
The hardest part of day trading is actually the self-discipline, right? And making money doing the wrong thing,
Mm-hmm.
and not doing the right thing when it's meant to protect yourself, right? So with day trading, you really want to have a very clear strategy, right?
Mm-hmm.
Or at least a handful of strategies that you're gonna explore. And aside from having strategies for how to identify what you're gonna buy and what your targets are, et cetera, you're gonna want to make sure that you have a plan in place to protect yourself, right? Because that's the idea, that you're trading high probability patterns or strategies, and you're sort of minimizing your losses so that over time your net gains are greater than your losses.
Okay.
But what happens, which is crazy with stocks, is that you could do the absolute wrong thing and make money.
Yeah.
And because of that, it reinforces like this bad habit, right? It's like you think making money proves that you're correct and that you're doing the right thing. And you could be making money and doing the absolute wrong thing, and then that's when danger is around the corner. So I would say that's the hardest part, is it like sticking to your trading plan in the good and bad times, when it's making you money and when it's not, because it's only time that's going to dictate whether or not your strategy is truly working and if you need to adjust. But if you're adjusting without really analyzing what's going on, then you're just swimming in the dark, and that's what I say is the hardest part. Especially a lot of people who go into trading stocks that are successful, especially, are kind of risk takers in a way.
Mm-hmm.
And they're typically very confident and don't like to be wrong. At least that's a disease I have. Yeah. So, it's a disease. I think it's a disease that you don't like to be wrong. So anytime that you enter a trade, even if it was technically right, and you lost money on that trade, you feel wrong. Mm-hmm. And dealing with that feeling before entering your next trade. Because if you're like still pissed off about the previous trade that was textbook and failed, you can turn around and do something that you're not supposed to do because the textbook thing isn't working and I can figure this out. Yeah. So that's the hardest part with day trading. And since you're working on such a short time frame, oftentimes you're in trades for minutes. At least for me, I don't like to really be in positions that long if I'm day trading. Yeah. So what ends up happening is like you can move through the day very quickly and kind of lose sight of yourself. It's almost like fighting in a way, right? If you're a trained fighter, you're training to stay calm even though you're getting punched in the face, right? Mm-hmm. With trading, you kind of have to approach it the same way. That punch in the face is maybe, $300 loss in 15 seconds or something like that, right? So it's like, okay, you get jolted and then you have to deal with that. So I would say it's the emotions of trading and like defeating your ego that is probably the hardest part. Yeah.
That's that's an awesome answer. And I can see how so much of that stuff flips through because, just watching like the volatility of the market right now, and, you could be, if you're not following something that's proven, it's almost, now you're just gambling. You threw something, tried it, and it works. A big deal. It means nothing if it hasn't been working consistently. So I know that's an awesome point for that. It seems like just knowing, like, being in and out of a stock that quick, that many times throughout the day, that alone, the discipline to just stay on point and not lose focus on what you're doing, sounds extremely fun. Question number 3, how do you analyze a stock and make your decisions?
Okay,
If
so
that's too big, you know, depending on how big of an answer that is for you, if you want to narrow it down and go over that, that's fine.
okay, so essentially, the first thing that goes through my mind is what is the overall sentiment of the market,
Mm-hmm.
right? Because like I said, the rising tide raises all boats. So if the overall trend is upward, I'm going to have more of a long bias or a buy side bias throughout the day. So depending on where we are, if it's like a 5-day, 6-day strong uptrend, the more that something is moving in the same direction, the more likely that it's going to start going in the other, right? So if it's like day 6, day 7 of, you know, a rally,
Mm-hmm.
I may be more cautious about how long I stay in individual trades and how much I'm looking to gain in that trade, right?
Okay.
Meanwhile, if it were early on, like the begin, like maybe day 2 or day 3 of a confirmed uptrend, I might be looking to get more meat out of the trade. So number one, first thing is, you know, what is the overall trend and how am I going to position myself against that? The next thing that I look for is relative strength for a particular symbol or sector versus the overall market, right? So market's in an uptrend. You know, what is, no, actually, I'll take that back. Sorry, there's one other thing that I do. I look at the early morning movers, risers and fallers, right? So we're in an uptrend. What stocks are in play and active before they're open, and where's there going to be action, right? It's kind of like fishing, right? So you want to go where the fish are, and you're going to make money trading where there's volume.
Yeah.
Because, you know, there's activity there, and you could count more on the data that's there because there's more data points, right? So kind of determining, you know, what's in play for the day. Now, this may be a stock that had earnings yesterday, right? Or had reported earnings before the bell. There's going to be motion there. So is a stock up or down overall? And if it is up or down and there's a reason for it to be up or down, now I have it on my radar, right? Then I have like a list of stocks that I trade regularly, like that I have like a good feeling for, and I kind of know the behavior of the stock and the traders that trade that stock. So, you know, I'll compare all of those to, you know, the general market against typically the S&P 500, and I'm watching for inconsistencies with movement. So like if the market is pulling in aggressively early morning, right? And this stock that had earnings yesterday is holding its price action and is not selling off with the general market, that lets me know that there's interest, real buy side interest in that stock, right? So then I would be looking for a level in the market, the general market, where buying may come back in, right? And that's pretty much, you know, relative strength, you know, analysis, right? And once I've identified that and I'm confident and I've established like a price point that I'm comfortable with buying the stock that's in play and showing relative strength, I'll try to match that with where the market should be turning, which could be, you know, a major line of support or, you know, a moving average or something along those lines, depending on the time frame and what I'm looking to do. But that's kind of how my day starts. And at the end of each day, I kind of look through the daily charts to kind of see how things are shaping up for, you know, I'll go through every stock on the S&P 500, just roll through it just to see are there any stocks that are displaying patterns that may come into effect the next day. I'll have a note of that. I'll put my alerts in for certain activities. So all of that kind of leads me into, you know, 9:30. And yeah, that's pretty much how my routine starts.
Very cool. Very cool. It sounds like it takes a lot of time to build that kind of analysis. You know, a lot of what I've been looking at, you know, doing has been long-term investing, and it just shows that there's so much that goes into building and that planning, and like I said, you said just hold yourself accountable and being consistent with something.
Yeah, the thing with trading is that everybody can have a slightly different approach and be successful. And you need to figure out what you can identify well
Mhm.
and what fits your personality, right? So there's certain stock patterns that I don't like to trade, for instance, because I'm not really good at separating which ones are true versus kind of false patterns.
Yeah.
So there's some that I just would stay away from. And anytime I trade this pattern, it just doesn't work out for me. So it takes time to kind of develop that. And I think you need to take a stab. That's the only downside, is that you kind of need to go through the growing pains
Of
to
making mistakes.
to figure out, what's going to work for you. And you're going to be making these mistakes with money.
Yeah, there's nothing more powerful than losing, failing, and then tying money to that to remember and learn quicker.
Exactly. So if you're interested in longer term trading, that's what you're kind of
It's
leaning towards.
I'm just that's what I'm doing right now because it's something that's more manageable. I can pick stocks that have a good long-term reputation and invest in, or in some kind of like index funds, or like something like Vanguard's VOO ETF. But I'm still just learning. So I'm taking this is great for me because I've looked at more long-term investment stuff. So the more I can answer about this, the more I pick up.
The only thing, okay, so I tend to now move towards more longer term trading, just because I can't be bogged down in front of the screen. Because if I 4 weeks ago the market was falling apart, I was in front of my computer day trading, right, and ignoring my I'm locked in. And what I find is that it cripples my morning, right? And when things are moving the way that they were, I could go in there, trade for the day, maybe $2,000 in the first 30 minutes and be out. It's kind of hard to stop there if you're up $2,000 in the first 30 minutes, but that's something that's possible. And then I have to look at realistically, what am I doing with my time? Am I supposed to be trading, or am I supposed to be doing my work?
Yeah.
So, and I get emotionally involved. And so for the most part, more of the trading that I do now is longer term, on a weeks to months basis, not like years. That's something I would never do. I don't even have an understanding of how people do that.
Mm-hmm.
But I'll look for grabs, positions that I could be in for weeks to months at a time. And if that's what you're interested in, one resource that I could give you is How to Make Money in Stocks by William O'Neill. Are you familiar with William O'Neill? And
I'm not.
Okay, I'll shoot you a link for the book. But he is either the founder or contributor to Investors Business Daily, the publication.
Mm-hmm.
And he's established a system called CanSlim,
Okay.
which is meant for people who are looking to trade and get aggressive gains. And it's not like gimmickry. It's more of it teaches you how to identify certain stock patterns. It teaches you what factors actually influence institutional money to invest in stocks, right? What are the institutions investing in and why? So that you're able to identify, what are the leaders in the market? What are the winners in the market? How much to allocate? It gives you a full breakdown as to how you should approach long-term trading. Like I said, stock pattern recognition, understanding earnings and financials, what to look for, what is a leading stock. You're looking for accelerated earnings, accelerated revenue, quarter over quarter. And the historical leaders have all exhibited the same behavior. So it teaches you how to identify that. And then when you know that something is wrong, how to identify danger. How to identify when the market is turning, how to identify, how much you should be willing to lose in a position.
Mm-hmm.
So I think by far it's one of the best books on investment strategy, and because it does approach it from both a technical and fundamental place,
mm-hmm.
and it's accurate in how you're going to analyze stocks.
Okay, I understand. That's really cool. Yeah. Shoot me that. I kind of wrote that down. I definitely like the direct link to that. But yeah, so yeah, any more information on any of this is great. I love that, like, the actual day trading is something I know so little about. So it's so good to be able to ask questions. So that's kind of leading into the next one. Knowing how you make your decisions was what was we just talked about. But what's your best advice for day trading? What's the best advice you could give to a new day trader or someone that's aspiring to do that?
The best advice I'd give to someone aspiring to be a day trader:
Mm-hmm.
don't trade. That's the best advice I'd give them, because the failure rate is really high.
Yeah.
And and you have to be a certain type of person to succeed at day trading.
Mm-hmm.
You're going to have to be committed for a certain amount of time. It might take you, for me, it took me maybe 2 years to find my rhythm.
Mm-hmm.
And that was 2 years of, like, 1 month you have a good month, 2 months bad months, and it's like, I'm thinking about quitting. It's really stressful. I think it's one of the most stressful things ever. I'm a pilot, right? I fly planes, and it's pretty damn stressful compared to like landing an aircraft. It's that feeling that I have when I'm pulling into land for 2.5 hours for the morning session. Yeah. Right. So it's pretty intense, and I would probably recommend not to, because it's not for everybody.
Yeah.
But if you're going to do it, I highly recommend that you first start with some basic education, like read Tools and Tactics for the Master Day Trader by Oliver Velez, which teaches you the psychology of stock trading and how to kind of organize your trading plan and create a trading journal. Yeah. I think that's more important than any stock pattern or anything else that you could learn. That's really the fundamental of what you're going to be doing. Yeah. Right? Self-control, self-discipline, and the psychology of trading. Mm-hmm. Then get like a paper trading account, a demo account. Either like I started with Thinkorswim, because as far as Thinkorswim is a platform that's now owned by TD Ameritrade. Okay. So before, when I was trading on Thinkorswim, it was before TD owned them. But it allows you to create a demo account, and they have tons and tons of tools that you could use, really good charting, real-time charting, and you can stay in demo account or in demo mode for as long as they will allow you. Like they'll give you like 14 days, but you can tell them I need more time. Mm-hmm. But go into demo mode and start practicing what you're learning, right? Just to get the language of the market down, mm-hmm. to understand, the mechanisms that are at play, to understand the studies that exist, so that when people are throwing out different things, okay, what is the MACD indicator, and what is the RSI? What are these things? Mm-hmm. But I would start there, and once you have a handle on things and you feel like you're able to start putting some money to work, then go with real money. Okay. And start with like on 100 shares, right? Yeah. And what I mean by that is like limit yourself to no more than 100 shares of a particular symbol at a time, right? So you're buying 100 shares at a time, and not more than that, because you're going to be testing. Okay, can I make 50 cents a day or 75 cents a day on 100 shares? And then when you prove that you can do that consistently, control your losses, then you move up 200 shares, then 300 shares, then 1,000 shares, or whatever your growth is going to be. Because if whatever is working at 100 shares, you should be trying to do the same regardless of how many shares you have.
Scaling it up.
Yeah. So I would start there. Books, a demo account, and then as soon as you're comfortable, real money. Because you'll see that once you go from demo to real money, there's a different pounding in your chest when you're involved. Yeah. So you need to get used to that feeling, and then stay at 100 shares until you're consistent, and then raise to the next share size, which should be like 200. Like I went from 100 to 200, 200 to 500, 500 to 1,000.
Okay.
So, you know, and with each bump, there's a change because you're like, all right, I'll just do the same thing I did at 100 shares. But if you're down $60 for the day, right, it's like what, $60, right? But on 500 shares, that same 60 cents is $300. On 1,000 shares, is 600, right? And you know, we have this attachment with money that, you know, $60 is not much, but $300 is, and $600 is, right? That's enough to do things actually, right? So it's not just like a dinner. It's like, okay, this could have been my car payment.
Yeah.
Right? So it starts to change, you know.
Start to really get your emotions going.
Yeah. You need that, and then you need to like know how to deal with that.
Yeah. Okay. Very good. Well, I think this segues really well into this next one is, so what was your biggest mistake as a day trader?
My biggest mistake. My biggest mistake. Going to the dark side, man. And this is a consistent thing. So, like, the biggest loss in a day is not necessarily the biggest mistake per se. I would say I've more than losing like on a big day that's a pretty bad mistake. You know, excessive losses, because like one day could wipe out your week or something like that, or your month. But where I feel I've lost the most money is in giving money back, right? And going to the dark side, where let's just say my daily target's $1 for my share size, right? And 9:30, I get into my first trade at 9:35. I'm up $1 at 9:45, and I'm like, oh, today's one of those days that I'm gonna crush it, right? One of my rules is that if I give back 50% of my day, and if I made my day and I kept going and I gave back 50%, I need to stop, right? Mm-hmm. Because once I start giving back more than that, I go on like full tilt and start getting more. I get more aggressive in the next trades that I take, and I start making poorer and poorer judgments. And there's been so many days that I've had like a full, like up 1,000, down 700. And it's like, why? You know, why did I do that? I could have stopped at 500. I could have stopped at 300. I could have stopped at 100 for the day, and I would have still been up. But I went completely in the other direction. So it's like, I would say that's probably the biggest mistakes, is like that little safety measure of 50%. If you violate that rule, like I said, that's the beginning of hitting the dark side, because then you start to violate everything else.
Yeah.
It's like a chain effect.
Snowball backwards.
Yeah. And I would say that's probably the biggest mistake that I make as a trader. Yeah, by far.
Very cool. Very cool. Well, with all that being said, is there like an ideal market environment that you prefer to trade in?
Yeah. What we're experiencing in the coronavirus. Well, more so downward. Yeah. Because if you look at all the bear markets, the downward action is fast and hard, right? So you get more movement down.
Yeah.
So I don't like to be in trades for that long. Like the longer I'm in a trade, the more uncomfortable I feel, that I start to get uncertain that my prediction is correct. And I might exit a trade early because I'm not getting, the follow through. I might say, you know what, my target was $1 on this trade. We're teetering around 50 cents for too long. I'm just going to bang it out, right? And take my 50-cent profit.
Yeah.
Right. And that's because the action didn't happen fast enough. On the downside, it happens quick. So like if you compare like 2002 to 2007, I can't remember, 2006 or 2007, that was like the last high in the market. If you compared that 2002 to 2007, that was 5 years, but the market came down in 2, right?
Yeah. Fact.
And in 4 weeks, we wiped out 2 years of growth in this last downtrend.
Yeah.
So that shows you that the fear emotion, the tendency to be like, I'm out, I'm gonna sell, is a much stronger and less discerning process than the upside.
Yeah.
So in those volatile times where things are going downward, I get the movement that I like. Even the upside, like the opposite in those times is aggressive as well. But I like when things are I have like a short side bias. So I like when things are moving downwards when we're in downtrends.
Okay. Yeah, you're right. The movement is so much more dramatic and so quick. And yeah, like right now, seeing how much of a bull market just went away. It's crazy, just like that. And seeing these stocks that when they drop, not just dropping a little bit, just the bottom falling out of them, just immediately is unreal. I think this next question you pretty much already answered, and I'll just hit on it. But I believe you said the next question I was going to ask is how long it really took you to feel comfortable with day trading, and I think you said about 2 years. Was that correct?
It took me 6 months to feel comfortable.
Okay.
But it took me 2 years to really like start to respect my own rules and say, hey, this is meant to keep me safe.
Yeah.
And getting to that point of like, all right, whether I'm up 30 cents for the day or up $2 for the day, I need to get into my rhythm and just accept it. So like I got to the point where I found my rule set that works for me. So don't give back more than half of your goal. Don't trade more than 4 symbols per day. So like 4 opens and 4 closes, either 4 symbols or 4 opens and 4 closes per day. Because I saw that on days that I was churning, that I was just losing money in commissions and getting frustrated and not being as discerning. So those were the type of things that, it took me 2 years to get to that point and respect it. But to be comfortable and say, okay, I could put on trades and I could tolerate, and I understand what's going on, was about 6 months.
Okay. Very cool. Well, I just have one more to kind of wrap this up, and it's a little bit of a curveball. What's your take, and did you do anything with cryptocurrencies?
Oh man, crypto. First of all, the concept of currency is kind of absurd to begin with, right? So money in general, it's like, all right, I give value to this thing, and other people give value to this thing. So since we both value it, we can both trade it. I just think that there's more people who support the traditional currencies that I don't see why there's this huge shift to crypto, right? Like I think crypto kind of favors people who are like kind of like early adopters in a way. But that's not what's going to give the money value. What's going to give the money value, the cryptocurrency value is how many people you could trade it with. And I just haven't quite, I haven't gotten on that wagon. And I don't think that I will, because I feel like there's better solutions out there.
There's so much stuff with a proven track record.
Yeah. And it's just like, I'd rather trade chicken eggs than cryptocurrency, because at least
know what those are going to produce.
Yeah, I could either get
scrambled eggs or hard-boiled eggs. I guarantee every time. That's the direction.
Or I could even get a chicken. You know?
Or chicken.
Yeah.
Well, that was awesome, Karl. Thank you so much for kind of hitting through some of those thoughts on day trading. Not that everybody be interested in such a time-consuming thing to get into, and all the stressors and the hardships of it. But I do think it's a cool part of the stock game, and one of the things people can do. You still should have some kind of education on to really know what all is there. So I really appreciate the time you gave us, and I would love to have you on the channel again soon. Maybe talk about one of those other hobbies everybody's interested in.
Absolutely, and I appreciate you for having me. And I think in closing, as somebody who's in business, right, I think having exposure to the stock market taught me a lot, and just how does the government perceive business? how are other business leaders, emerging from a startup, no-name company, garage, based company to huge multinational companies, and just like even understanding like why the price of oil fluctuates and why the price of beef fluctuates, and understand, like being able to identify when things are overpriced and the value could be coming down. Just like with real estate, I could look at the charts of real estate prices in a neighborhood and say, okay, we're topping out based on what I'm seeing on the real estate chart, right? Which I think a lot of people don't know, and I think they're making a mistake. So I'm not going to buy a house when I feel like the market is retesting historical highs, right? Because typically there's going to be a reversion at that point.
Mm-hmm.
And it's just basic. And I look at everything like a stock chart.
Yeah.
So I think by having
Are
some
we
exposure,
right here and about to do this?
Yeah, are we right here and about to do this, or did we just begin this? And based on what we're saying, this is going to be the following move.
Yeah.
So I think it's helpful for people who are in business, who care about their money, people who have retirement accounts, to be able to understand trading a little bit, so that when things are hitting the fan, they can say, you know what, it might be time to move my money from being in equities to cash, and knowing, okay, well, the correction has happened and let me move back into the market again. Mm-hmm. Most people's 401k accounts, they just keep adding money the entire time, up or down, with no idea what's going on. They'll comment like, oh, my 401k is getting killed, but they don't know what to do.
Yeah.
Right. So if you at least studied like that how to make money in stocks, you can self-direct, and you can also at least be able to say, it's time for me to move out of stocks and into something else while things settle out. And I think that's probably the best thing for the general public, especially, is just to understand those nuances.
Mm-hmm.
So, yeah.
Very cool. Very cool. Well, thank you again, sir.
Thank you for having me.